for more on just what's powering this market overall. The government shutdown is now officially over. There was an expectation it was going to happen. The markets are at or near record highs. The Dow is, in fact, at a record high. How do you reconcile all of that against that backdrop?
So we are in the school of thought that we think that this market is positioned for a pullback. It's not a question of if, it's a question of when. We think that a 10 to 15% pullback in the market is definitely on the cards. And actually, this is going to be healthy for the market because we feel that the breadth in the market will improve and the leadership in the market is going to change.
All right, so if the leadership in the market's going to change, that takes us to our word of the day. What is yours?
Handoff is the word of the day. So we believe that the leadership change in the market is going to be, there's going to be a handoff from AI winners to AI enablers. So far, the market has rewarded investing in AI winners, your NVIDIAs, your Microsofts, your Alphabet. But we feel that there's going to be a transition to the AI enablers. These are the companies that build the infrastructure that is necessary for AI to exist. So we are talking about the brick and mortar, construction, equipment, utilities, energy. And if we believe in AI, which we do, then we have to invest in companies that build the infrastructure that is necessary for AI to exist.
That takes us to our mystery chart. We showed it before. We mentioned it was a Dow component that is up 58% already this year. It is your stock of the day. What is it and why?
So we like Caterpillar. We've been buying it for our clients. And we feel that, Caterpillar, if you look at their business, it seems like they're transitioning from a traditional construction equipment company to more of an AI infrastructure supplier company. So if you look at data centers are huge. We are expecting the data center capacity to nearly triple by 2030. So Caterpillar is involved in not only building the data centers, but their equipment is also used in maintaining and operating their data centers. So that is why if you look at the recent earnings report, they hit it off the park because that business is really growing.
Now, outside of that Caterpillar-specific trade, the enablement of AI, if you will, the infrastructure trade, are there other places you're looking as well?
Yeah, so we do, for broad exposure for our clients, we do like the SPDR ETF XLI, which is the industrial ETF. It gives you broad exposure there. And a lot of the components in XLI are companies that are investing in the AI ecosystem.
And before we let you go, do we feel as though the outlook pending pullback is still okay for 2026?
We do. We do think that there could be possibly a year-end rally, but we do think that there's going to be a pullback in the cards because concentration risk is huge. More than 35% of the S&P 500 is in a handful of tech companies. So we would think that eventually this is going to lead to a pullback.